I definitely think that's huge. But yeah. So let's go ahead. So what is the goal for you as far as real estate investing? Obviously, your Instagram, shameless plug right now. It's was it Road to 1,000 units?
Yeah, so it's a road to 1,000 units. That was my goal when I first started. I wanted it to be high,
Yeah.
but I still think it's achievable. Um, you know, my whole thing is like capital stacking, right? So sometimes you can refinance a property, get your cash out, and buy another one. Other times you might have to take a step back, right? So if I sell a property, yeah, I'm losing the door count, but I'm getting all that equity profit gain that I can use on a huge down payment on a larger property. So um, I kind of I honestly believe I'm going to hit the 1,000 units within the next 5 to 10 years. So I'll have to probably change the handle, but it's just a system, right? Like it's not, I'm not like some type of genius or anything like that. It's just something that, I'm not a trailblazer. I'm following like a system that works, right? So, I buy properties that are undervalued where the rents are low. I put $15,000 in the interiors, labor and materials, right? And I changed the exterior look. I paint the exterior, new landscape, new lighting, new roof, and I make sure that the property is in a good neighborhood where I can find those tenants that were willing to go. If the current tenants are paying 500, but there's still potential tenants to pay $1,000. That's going to double the value of the property. So
Yeah,
it's all system.
exactly. I think that you made a great point that it's kind of like a snowball. Going downhill, it just gets bigger and bigger. So as you buy property, obviously you're going to be a little slower at first. You
Yeah.
get your feet underneath you. You get your properties, then, like you said, capital stacking. You can sell these properties. You can cash out, refi them. You can do a lot of things to leverage them to get into bigger doors. Obviously, you had your 18 unit, but now you said you have a 32 and another apartment complex. So that capital stacking, and I would love to go into that deal. While we're on this subject right now of the what was it the 18 apartments?
Yeah. So that property was half vacant. We had 10 vacancies, so we were able to renovate 10 units right off the bat, which is good and bad, right? Like you want a property where there's only I don't know, a few vacancies, so you have the other units, paying your mortgage and stuff. But since we bought this cash because we couldn't get a loan on it since it was half vacant, we were able to knock out a lot of units renovation wise, and we renovated the first like 3 units, and then I was already taking pictures. Right, I was already giving it to my property manager, like start marketing it, and we were already getting potential tenants coming by to look at it. So I was like, all right, this works. So let's continue, putting money. So we did the 10 units, we renovated them. The other 8 unit tenants, they were month to month. They were paying like 500 on average, like $506, $509, and we bumped their rents up to like $800. And half of them left, and the other half stayed, which was, the half that stayed was just great because now we just bumped their rents and we don't have to renovate their units.
Yeah.
Um,
How'd you find the deal?
but yeah, and the property had like no, the property had some sketchy tenants. We had a drug dealer trying to sell us drugs. We had we had a dumpster on site. I found like on a Monday night, my wife and I got back from dinner and we found one of the tenants like dumpster diving.
Oh,
So
jeez.
like it was like crazy stuff like that. But the property was like in an awesome neighborhood. It just people were living there.
Mismanaged.
Yeah, mismanaged, right? So we painted all the brick white. We
Yeah.
put new roofs,
So it sounded like you
and
did a lot of renovation to this. First off, how'd you find it? And then second off, why don't you just touch real quick on, how when it's a 5 unit or higher, it's based off of the income. The value of the property is based off the income, whereas, 4 and below is comparable. So why don't you touch, first off, how'd you find it? How'd you do the marketing to find it? And then, 5 plus, how do you add value?
so there's a brokerage company called SVN, and I don't know how I came across them. because at the time I didn't really know any of brokerage. I guess I just Googled it and I just found their page and I just started searching their properties that they had, and it was one of the properties that they had listed. And so I found the listing agent and I contacted her, and next thing you know, we're flying up to Pensacola to do a site visit. And as far as like 4 units or less, so you're looking at like the value of the property is based on like the neighborhood, right? Or based off like if all the houses are going up, appreciating, then the property will appreciate, as well, or depreciate, right? But with 5 units or more, it's all income based, right? So you're looking at the NOI. So what's the most important thing about this business is increasing the NOI. So if I can increase the rents and minimize the expenses or lower the expenses or keep the expenses stabilized, that NOI is going to skyrocket, right? And I'm always looking at ways to add like 10, 20, $50 onto the rent. So one of the ways is like a pet fee, right? Like you're allowed to have pets, but it's going to cost you $50 a month more in rent. Or if you want us to install washer and dryer units inside your apartments, that's going to be $25 more. So our property managers offers like some type of like insurance program for the tenants. That's like another $30. So next thing you know, like I had the property listed at $995, and now they're paying like $1,100 a month. That skyrockets the value of the property.
Yes, it does.
Right?
Yes, it does. And a lot of people don't understand that. If you buy a property where you can't raise rents, there's two options right there you can do. You just because they're at market rent doesn't mean you can't increase the value of them. You can, one, like you said, do pet rent and charge a fee for that. And two, you can minimize the expenses. I know someone that had a 10-unit apartment complex. It was one water bill, but they separated them. And that there limits, the expenses. Definitely, I want to touch on real quick. So it's a controversy subject, but pets, you allow pets in your rentals?
For sure.
Okay.
For sure.
Have you had any, bad experiences with them?
No, I mean, the only experience that I have with them is that they'll chew up like the baseboards or whatever. But I mean, when the tenants leave, they're not going to get their deposit back, or I don't know, they walk their dogs around the property and there's like poop on the property and then they have to clean it up. Yeah. So what we're trying to do for Magnolia 32 and Mobile, or 32 unit, I'm actually building like a little dog park, but it's very simple. It's like just like a picket fence, and then with a little like stand in the middle for people can, to clean up after their pets. And that's gonna attract those tenants that have pets, and they're it's an amenity for them, and it helps us out because we can increase the rent. So I love dogs and cats.
100%.
Bring them over here. And I would say do not charge them like a one-time fee or like a big hit in the beginning. Just $25 a month, and that will boost the NOI. And if half of the property happens to have pets, then that's great.
Yeah, 100%. We had Casey Denby on the podcast a couple weeks ago, and he said the same thing. He loves pets. He does, though. He charges monthly fee, but he does do an upfront non-refundable fee. And he says, like he does he said it gets upwards of $275 to $400. Non-refundable.
Yeah, some people charge $500. I'd rather do a lower one and then increase the monthly fee, right?
100%.
And then our property's insured, but with pets, you pay a little bit more on the insurance, but you got to have it. And I tried to tell the property manager, like dogs, like I think it's like 75 pounds or bigger, are not allowed. So so most of our pets are usually smaller dogs or cats.
Yeah, and it's funny because a lot of renters right now through COVID, they stayed at home during work. They bought pets. So if you don't allow pets, that's cutting the amount of people you can rent to right there, probably by like 60, 70%. Because they all have it, and you're just cutting off a big pool of people that cannot. So,
and there's a thing that, like, if the previous owner is paying like the electric, water bill, like the utility bill, with the new tenants, I believe it's called RUBS, and for these new tenants, you can have them pay it. So that's going to minimize the expenses big time, because those utility bills, if you're paying it out of through the property, they add up.
Yeah.
So
So
you want
so
to slowly like start charging it back to the tenants with the new tenants.
got you. So would that be, you purchase the property, they're paying,
Mhm.
the last owner was paying for everything, and then you slowly, what you're trying to say is you slowly, like, you give them back, since it's separately metered, you give them back the electric bill, and then you give them back the water bills and whatnot.
Yeah, so as you're repositioning it, right, the current tenants that are there, you can't do that too. But as you get new tenants, for the vacant units that you renovated, you can change it.
Yeah,
So,
and that's another way to
so
add
for the
value.
first few months, you're going to be paying like a pretty high utility bill.
Yeah, but okay, no, that makes perfect sense. So, like, moving forward, obviously the goal is like 1,000 units, right?
Mhm.
But moving forward, first off, partnerships. Obviously, you did that
Right.
one with your dad. Did you do the other two as well with your dad or someone else?
Yeah, so just with the family, I'm trying to grow organically. So there's that's another subject. Like, okay, you can grow organically slow, or you can raise capital, right? And you can start raising money. So for me, I mean, I've kind of learned this from my mentor. My mentor had a partner, and they had a fallout, and one side just got impatient, so he just wrote him a check and got him out, and he's kind of growing organically as well. So I'm kind of following his footsteps, and
Yeah.
maybe you're only doing one deal a year, but like
If it's
you get
50
an 18
units,
unit deal, a 22
Yeah.
unit deal, 32 unit deal. Next thing you know, I'm like 72 units in. It's only been 2 years.
That's
I'm
insane.
32 years old, so I have a lot of time in this business, and I'm not in a rush. Um, but
No,
yeah,
that's insane. You've grown. I mean, you've grown at such a high rate, and honestly, it feels like it's because you started off, with a bigger deal, and because you
yeah,
added that value to that property. Now you're able to, like you said, take all your money out that you put into it. Now you can reassess that, distribute that into a new property, and do the same thing again. Just like you said, burring on a bigger scale.